Hello, trading is closed on March 26th, 2019. After yesterday's close, we said we had mixed signals. We said the odds favored but didn't require a gap outside the day's range. We said what I'd like to see would be a rally which didn't take out this high, but I couldn't rule out gapping under these lows, and I wouldn't risk any money on the trade. Well, we got what I'd like to see, and tomorrow's pattern is the one with the early low. Doesn't mean you won't gap up first. And if we're going to avoid a drop, and probably a big one, we're going to have to gap up and take out this high. Well, here's the daily pattern. MEJT said this drop was false, that price would recover over this line, which they did. So that's resistance. You've got a wall into the close. Often that'll gap down when the market reopens. You have a gap up, new high. You can't close over any of these highs. You can't even close over the intervening low. This is a pattern which almost always closes near the day's high. If it doesn't, and if it doesn't rectify that by gapping up and taking out this high early tomorrow, it should lead to lower prices. This wall often leads to a gap down, and it is somewhat positive that we recovered over all these lows after this big drop. So that bit of positivity conflicts with the negativity we couldn't take out these highs, and increases the chances but doesn't require us to gap outside the range tomorrow. Now here was the same type of a day we had today. It's the same pattern. Tends to rally all day. When it drops in a straight line. We didn't really go as far down as we usually do. We also didn't go quite as far down as the 2780 level the FOMC announcement would require us to go. Instead, we just closed little changed yesterday. When you close little change, often you make the move the following day. That would require us to take out this high. Instead of doing that, we just repeated the same pattern. This is like mini-me. You take this length, even the fibs are right there. So it just repeats the same negative pattern. Can still get invalidated by gapping up, taking this out, and preferably taking this one out early. But that seems like a pretty tall order to me. Can't say it's impossible. So if that is the high, right at this point, you've got some nice Fibonacci relationships. We don't know for certain how to count this yet, but if that's A and that's B, got a pretty hit right there, and this ABC works there, and this ABC works there. It's really a very pretty picture. Doesn't mean a hit, doesn't mean it's going to work, but if it works, you can explain it. So for tomorrow, we look for the pattern with the early low. If we don't gap and take this high out early, lower prices should print, and a high likelihood, but not a requirement, that we gap at least under this low and preferably under this one. And if we do start falling, we have a target of the 2780 level, which could be hit. This we first had to move over the point of the FOMC announcement. We then moved under it. The next leg up should have been the largest one. And when that holds, goes over by that much, that's the bull's opportunity. When they pass on the chance and they find resistance there, it's possible that's all you're going to get. So the bulls really have a lot to prove tomorrow. They really have to take out this high, ideally by gapping over it. And if they don't, I look for a big move on the downside. That's today's call.